What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be doing some analysis for one of my favorite companies, and that is Meta Platforms. This has been one of my best performing stocks in the last couple of years. I've been trading and investing in this company since probably 2019 or so, and I pretty much sold all my shares most recently at about, if we go down here, I was selling at roughly $580. And now I just own one share because I pretty much just want to keep an eye on it until it drops. Then I'll be willing to make a bigger position. But the interesting thing here is if you compare this to like a company like Palantir, which is up over 20% today, Meta is pretty much doing the same growth that Palantir is, okay? 15 to 20%. The problem is Palantir is trading at 200 plus times earnings right now. Meanwhile, Meta is trading at 26 times earnings. Okay, so that just puts it in perspective of how overvalued Palantir is and how undervalued Meta is. So Meta is doing, it's a $1.4 trillion company. The last 12 months they did 156 billion in revenue and they did $55 billion of net income. So this is a huge profit machine and it's only trading at 22 times earnings. Okay, this is a company that's growing 20% this year. Okay, it has the consistency. They have the almost a monopoly. I don't want to say it's a monopoly because there is some competitors, but it's for owning Facebook and Instagram and Messenger and WhatsApp, it's hard to compete with that. Here's the last couple of years of their PE ratio. We can see it's right in line with the average, right? 26 times right now. So I don't think it's going to fall, let's say below 23, let's say below 20 or so. I don't think that's going to happen anytime soon. I think it could be years before we see that. But I could see like a 22 or a 21 happening. And that's why I think right now at 26, 27 times earnings, it's kind of pushing it to where it's not really attractive as a buy. Now, if we look at it like this, let's say it maintains this ratio because it sometimes it could just sit at 25, 26 times earnings. If that's the case, then and next year they're expected to do $25 EPS. That means this is a $625 stock by the end of next year, right? Let's say sometime in the middle of next year. So this stock could stay at this price and just slowly elevate to roughly 625 next year. And then I might never get a chance to buy at a better price, right? So that could happen. But for that little bit of upside, there's also just as good of a chance, if not more of a chance, that the stock will fall that much. The stock could easily fall 20% or something. So that's kind of what I'm waiting for because when that happens and the stock is, let's say, $500 or less, well, then it's more attractive as an investment. So that's really what I'm looking for here. Other than that, Meta is a solid company, 10 out of 10. They have the consistency, they have the balance sheet, they have the right founder and management, and pretty much everything about this company I like. So once this stock is roughly under $500 a share, I will load up on more shares. And then I think Meta is going to be up and away. And how I said, I think sometime next year, it'll be roughly $625.